Hey, what's up, guys? Welcome to the Friday of March 8th, 2019 trading recap here at Alpaca Trading. My name is Ruben, and I am going to be going over the plays that we alerted today and see where you could have entered, where you could have exited, and how you could have made money. So I'm going to start off with SPY, the S&P 500, because that is basically the market. And today was one of those days where SPY actually gapped down and opened below the 200 SMA here on the daily chart. And then what it really did is, or what it actually did, was that instead of basically continuing lower from that point, it posted all of its losses during aftermarket and pre-market, and then gained back some of that during the day of trading. So it was a day where it basically opened up, hit 272.42, and then it ended up, going on an uptrend from the middle of the day all the way up till aftermarket. So it was a kind of a messy day to play SPY, just because we've been used to it being on a consistent downtrend, for the past 4 or 5 days, and what we as traders want and what really benefit us is direction. And today it was pretty much trading in a range until about 1:30 p.m. Eastern time. As you guys can see, it opened right here, and then it was kind of on this kind of channel going up and down until it finally found its direction, and it broke through and closed higher than it opened, but still about 55 cents lower than the previous day. So technically, from a technical standpoint, SPY is still on a downtrend. So as you guys can see, SPY tried to go back and hit the 200 SMA on the daily, and it didn't do that. The wick barely touched it, if even that. So it's going to be interesting to see come Monday if this is a reversal or if it is going to continue down. As of now, this is not a confirmation whatsoever of SPY reversing. As you guys can see, it is trending below the 6 and the 12, even though we are now seeing a crossover of the 6 and the 12. And actually, that's kind of like a little bit worrisome, because this crossover that just occurred yesterday, and that is also starting to create some space here between the 6 and the 12. Let me just zoom in real quick. That tiny space that's being created between the 6 and the 12 is on its way to maybe become lengthened or widened, because it literally just, the 6 and the 12 literally just crossed over, which means that technically this is a signal that it's going to continue on a downtrend. As you guys can see, it was an uptrend here, so it was trending above the 6 and above the 12 and above the 6, and then now it's that 6 and 12 has crossed over. So that worries me a little bit, because we don't know if this is today was just an area of consolidation where it was just trying to just ease up on that steam. It's just kind of been on a roll here, so we don't know if Monday if it's gonna go this way or if it's gonna continue down. So just looking at the indicators, we see the RSI now going from oversold, to overbought. People always get these two confused, and I'm no exception. From overbought, and then now it's finally hitting that area of where the RSI is hovering right around the 50 range, right? So usually whenever the RSI is trending above 50, it's healthy. If it's trending below 50, it's not. So right now in the daily, it closed today with an RSI of 50.1499. So I would most likely not have held any swings going either direction to Monday, because we just don't know what's going to happen. But if I look at the MACD, you see the crossover here as well, with a wide gap and no indication whatsoever of the histogram, the red bars, getting that darker color, that darker red, which indicates like this color right here, which indicates a reversal to the upside. So just something to think about. So that was kind of like a broad overview of what the market is doing right now, just to give you guys a heads up. All right, so let's look at SPY and what was alerted today. So this was Kayla's call. The SPY Queen entry above 273.80, 273.06. So right here for a call, and 272.62 right here for a put. So when you see the market open, right, and you see it trading sideways like this, you know, you don't want to touch it. Like this is like a no zone for you as a trader, because it's going to confuse you. You don't know what's going to happen. You want it to create a clear direction. So the first clear direction happened at around 10:40 a.m. When we saw these three giant green candles cross above the 50, above the 6 to 12, hit that 45, almost 60 degree upslope, and it crossed over the 50 and the 200. And then, of course, once it hit about 273.86 or so, it reversed. So let's see why it hit 273.86 and then it came back down. Excuse me. Why it came back down? Because it was kind of matching the action that was happening here during pre-market, and it never went above that. So it came back down and kind of created the war zone that we call it. So you have the 6 to 12, the 200, the 50 all hanging out here together. We don't want to touch it here. So if you would have entered, it would have been, you know, right here, and you know, we would have you would have been able to quickly make about almost $1, so 83 cents. Not a big move, but still you could have made that money. And then once it got close to here, you could have seen that it was getting to the 70 on the RSI, so that would have been a good place to sell on the 1 minute chart. So then it came back down again, war zone, we don't touch it, and then it came back up again, and then this is where we say, okay, it's forming a chart pattern, right? If it's rejecting the same level that it did right here after creating a neckline down here, this is what we call a double top, right? So if we go into the 3 minute chart, we see the double top right here. If we go into the 5 minute chart, we see the double top right here. Okay, so double tops are one of the best chart patterns that never or very, very rarely fail. And as you can see, and honestly, what'll happen is once you see the double top form, and I did announce this in the Discord chat group today, the idea is for once it rejects the second top here, for it to come down and basically lose the same amount of distance between the neckline and the top and the bottom. So as you can see, the idea was for, if you would have entered up here, you could have basically made money all the way down to 270, 249, right? So it's not a perfect downtrend, but as you can see, after this double top was created, it tried again, but it created a lower high, and then it just came down through the 50, the 200, the 6, and the 12, and eventually hit that 272.5, right? So honestly, if you are familiar with the way that SPY trades, you would have known that it was probably going to be very, very difficult for it to go to break through this resistance that we see here at around 271. Just because if it would have done that, it has a huge gap down to 270. So after you see so it rejected so many times. There's a huge chance that for some reason it's just going to try to maintain. And I mean, because I mean it's SPY, so it's 500 companies that all would really have to be in trouble because of the market. And I don't know if we're still there yet to go down to the next level. We've gone down a considerable amount. We got all the way up to 281, just last week, and for it to have gone down to 274, or actually 272 today, the bottom, the low, is pretty pretty significant. And that's based on the fact that we still don't have news on the trade deal. We still don't have any major catalyst that's causing it. So again, this is just a market that's correcting itself. So again, it eventually broke through that 273.06 again. So we can also see this as a retest, and eventually had a healthy correction here, and then it came back up to end it at 274.46. So you could have made money here, you could have made money on a put down here, and then once it broke the call here of 273.06, you could have made money all the way up to here. And then if this would have happened, you could have basically cut your losses right as it confirmed over the 50 SMA. If you would have wanted to be conservative, if you want to be less conservative, you would have wanted it to wait to bounce off to 200, but it didn't, and because it didn't, it continued on an uptrend after that. So that was SPY for today. Okay, let's look at VXXB. So this is Barclays Bank. Kayla posted a put for this. 33.92. So put if it goes below 33.92. This was at 9:36 a.m. Eastern. So as you can see, it really tried to test it, to test that level of support. No confirmation here. Confirmation here for sure. But then, of course, as you guys have learned, it's going to retest, right? So it retested, came back up, and then eventually it confirmed again, try to retest that area of now resistance. It was not able to do it, and it came down, right? So this is where you could have made money right here, maybe entering here and selling down here, or whenever the 6 and the 12 would have confirmed that crossover, which it actually didn't. So pretty much somewhere around here on this one, you could have exited. Then it basically broke through the 50, try to confirm again, or try to go above the 33.83 line. It basically did it here. It did confirm above it, but as you guys can see, it did not. It bounced right after 200 SMA, which is again another area of resistance that we have learned how to use. And if you would have been able to just be patient, once you entered here, you would have seen it go all the way down to 33.23, which is approximately a 2% gain to the downside. All right, let's go to the next one. So Twitter. Twitter was announced as a call by Kayla at 9:43 a.m. So she announced it somewhere around here. So if it broke above 29.81, you guys could have entered a call. So let's see how it did that. So let's see, 9:43. Okay, so it was announced around here. So again, here we have these two green candles right here that confirmed went above 29.81, and then it bounced off to 200, right? Okay, it bounced off to 200, but we can expect that when this happens, it's gonna retest, right? Especially if it's that close to the SMA, which it did. And then again over here, it basically went below the 50, and then eventually came back to retest the 29.81. So if you would have entered right around here, you would have most likely gotten faked out. But hey, you know what? That's the market. That's basically how it works sometimes. So and of course, these candles are now below the 50 and below the 200. You literally have nothing below here to go by in terms of like, hey, where can I see if it bounces off of? Well, if you want that, you could have basically set your own level of support, maybe at around here. In this area, right? Because this is where the last level of daily support was on these candles. So what we want to see is it going to create a lower low? If it's going to create a lower low, so if it's going to go below this guy right here, then maybe it's going to be on a complete switch of downtrend. So if you don't have an indicator to go by of how to hold this, use the last area of support on this daily chart, on this 1 minute chart, for a quick kind of to see if it'll bounce off of that. So anyway, if you would have entered again at the break and hold over 209.81, you would have been able to catch this uptrend that it had, and as you can see, it rode above the 6 to 12, consolidated a little bit, but again, we never saw, or actually we did see a slight crossover here, but it was very short-lived. As you can see, it was trading kind of sideways. There was not that much distance between the 6 and the 12, so you could have held here, and then again it came above the 6 and the 12 and had another wave up. So if you would have entered Twitter today, right around here, once it maybe broke through on the second candle, you would have been able to make about 1.12% on your call contract. And then as you can see, it kind of traded sideways, came back down, and again it kind of traded in a channel, right? So it was between the low of the day and the high of the day, and it kind of just went trading sideways. So Twitter is not really one of those stocks that I personally like to trade, just because it's just, I mean, if you just zoom back and look at the 1 minute, it's technically just trading sideways. So there's not that, the volatility here is not huge. But again, everyone trades differently and everyone has their favorites. Microsoft was announced by Kayla as well, to enter a put if it went below 108.81. It did not. So again, if it didn't, you could have made your own place here, but as you can see, it traded sideways, and it didn't really create a solid uptrend until the afternoon, when it basically hit this resistance around here of 109.86, and again, it kind of created that double top here, came down, but did not bounced off the 200, or didn't touch the 200, and then it came back up with the rest of the market. So again, this is just up to you how you want to be conservative with your plays, but again, Microsoft was alerted as a put today, so if you did not enter this, no big deal. All right, let's look at ROKU. ROKU was alerted as a call, and if it rejected the call, you could enter a put at around 69.56, posted at 9:49 a.m. ROKU had a great move here, so it went above 69.56, retested it, bounced off the 50, went above the 200, and then it had this clear uptrend here. So if you would have entered here, you would have made oh man, hold on 1 second. You would have made a nice $2.45 per contract, or if you enter with stock, and 3.54%. So really nice move. And then of course, you would have exited right around here when you saw that the RSI was hit 82. I mean, that's pretty crazy. But again, we confirm the indicator with the price action, not the other way around, and also the MACD crossing over. So this would have been a good place to exit once you saw that the RSI needle started pointing down and you saw the reversal here of the MACD and also the decrease in volume. That just meant that the momentum was slowing, and then ROKU basically started trading sideways. All right, let's look at NVDA. NVDA, again, another call by Kayla. Entry below 147.88 for a put. It did not happen, and that instead it just went the other way. So that is something that you would have had to enter or play at your own with your own knowledge there if you wanted to enter a call. Let's look at BABA. That's the last. Excuse me, BABA. BABA was another one that didn't really hit today. Call above 175, so I'm not even going to touch it. And then last but not least, Mike alerted Amazon above 1604.50, which is this bottom line here. And then he said he was really going to load up on contracts if it broke through 1615, which it also did. So this was alerted at 12:25 Eastern, so right around this area right here, right around 12:25 right here with these two candles going. And as you can see, it broke above 1604, consolidated, tried to retest it, came back up. And as you can see here on the 1 minute chart, you have two candles, one that closes below it, and then another that serves as confirmation. But I would also like to point out this wick here that it tried to come back up. So if you see a wick like this that's trying to basically touch the tip of the line here, I would probably be wary of using this as confirmation. And also for a stock like Amazon, just because of how expensive the contracts are, I would probably look for confirmation on the 3 minute chart instead, which is a little bit more conservative. And as you can see, the second candle did not open and close below 1604.5, so this was not a confirmation to the downside. So again, it was basically consolidating and then bounced off excuse me, 1604.5, and then came back up, bounced off the 200, consolidated, went above the 200, and eventually hit that 1615, went above it, confirmed, retested it, came back up. So if you would have entered Amazon at 1604.5, so maybe around here, you would have made a total of $17.21, or about a percentage point, which is huge for Amazon. So again, it's just about being patient and understanding where the indicators are. Amazon is a play that I would only suggest for those of you that have the account for it, but I know Mike made about $2,200 off this play here that I just showed you guys. Okay, I think that's it for today. We did have some swings from yesterday. For example, one that was alerted was what's it called now? It was Seal. So let's look at Seal. What happened here? So most of the trading happened during aftermarket and pre-market, and then it was just a failed attempt. Came all the way up to 7. This is actually where I got screwed over with it because I entered around here prematurely, which I should not have done. I think everybody was thinking this was going to be the new BPTH, and it was safe to enter anywhere, but and especially with this volume. But there was a lot of slippage, so the difference between the ask and the bid was huge. And then I entered a market order when I should have entered a limit order, and then I lost about, I don't know, $2 or something like that per stock, and I think I entered with like 150. So that was a failed play today. Not very proud of it. I should probably just have listened to my own self. I always say don't enter anywhere near the beginning of the trading day, because this is how this shit happens. If I would have just waited, you know, I don't know, 15-30 minutes, I would have been able to establish very clearly that this was not going anywhere, and eventually the stock just died. What else did we have on the swings before I forget? We had looking to short snap if it breaks and holds below 947. In this case, snap actually opened, it gapped down, and it actually opened at 919. So that makes that 947, basically the play that I wanted to give you guys happened during pre-market and after during pre-market. So because it basically opened all the way down there, I would probably not have entered, especially if it starts on an uptrend like this. As you can see, it closed at exactly $9.48, which is still a cent above what I told you guys. So if you guys want to try this again on Monday, feel free. As I said, if you want to be on the super safe side, wait for a second daily candle to open and close fully below the 6 and enter this on Monday. So I did point that out, and there was a reason why I did that, and the reason was what happened today. All right, cool. So that is it for the trading recap for today. Lots of awesome plays. Lots of money was made today. Our $200 challenge is going really well. I'm at now 109% in just 1 week. I'm going to try to grow it to about to that above 727% in about 4 weeks. Again, the reason why the percentage is going to go up exponentially is because I am now on Monday going to enter with a $400 account size as opposed to $190, which is what I started with, and that's how I'm going to grow my account exponentially. So and then also Mike started a $10,000 to $100,000 challenge. Really good on his way to that with the Amazon play that he did. So we'll keep monitoring the challenges throughout the course of next week. I'm not saying I'm going to succeed. I may as well fail with it. Who knows? But I'm going to do my best at following my own rules, not get greedy, stay patient, and hopefully I can beat my old record of 727%. But if I don't, that's okay. All right, guys, thank you so much for watching. I will see you guys on Monday.